Tech Mahindra, which put out its second quarter results, that largely came in line with what the street was expecting. The profits grew by 4.7% to come in at 718 crore rupees, and the dollar revenue growth was also stronger by 4.7% this time around. Let's get in Pranay Jain. He joins in for all the number crunching. A good set of numbers all in all, Pranay.
Yes, India's fifth largest IT services company has managed to deliver a good set of earnings for the second quarter of this fiscal. And if you look at the dollar revenues, they have grown by 4.7% to touch about $758 million versus our expectation of a $745 million. So it's clearly a beat on the top line. And that has transpired into the operational performance as well, where the margins have expanded by nearly 220 bips to come in at 23.3% versus the expectations of about 22.3%. And if I look at the net profit, these benefits haven't translated onto the bottom line, which has come in at 718 crore rupees, which is up nearly 4.7% sequentially because of the higher tax rate as well as the lower other income apart from the increase in the finance cost. If I look at some of the qualitative highlights, then they've seen 9 client active additions and the user base has now come up to 576, and majority of these client wins have been in the smaller category and smaller bucket size of $1 million, where they've managed to garner 8 clients and 3 clients in the $5 million bucket. $10 million bucket has managed 2 client wins and just 1 in the large category of $20 million. If I look at the geographic revenue mix, that has been largely stable, where US has contributed 44% to the revenues and Europe has seen a marginal uptick up to the tune of 33%, while rest of the world remains stable at 23%. And lastly, in the segmental performance, telecom again has been stable at 47%, manufacturing has contributed 19%, media has contributed 12%, and BFSI as well as retail have continued to add 9 and 7% respectively.